So in this video, I'm going to talk about my experience after 4 years of trading, how I failed during 3 years but was profitable for the last year. And I'm going to talk about different frameworks that basically will help you along your journey, because you cannot compare your maybe 1 year journey with my 4 year journey, but you can compare frameworks. And you will understand what I'm talking about as we go through this video. But let's start with the first approach, which is, it's not your psychology, it's your technicals. A lot of people have been led to believe that psychology is the #1 thing when it comes to trading. That's what's thrown around out there, not only on YouTube, but courses, Twitter, everywhere people talk about psychology being #1. But the thing is, psychology is indeed very important, but not for everyone. If you have just come into trading, of course your mind is not made to trade, but your technicals are also not there to make you possibly profitable. So when we're talking about psychology being a key factor in your trading, we are talking to people that have technicals already down. They understand why the market moves, how the market moves, how they can be profitable. They have a profitable strategy. The strategy has been tested. They believe in the strategy. All these things have to come first before you start saying, oh, I have limiting beliefs. Oh, how am I going to tackle this psychology problem? Oh, I took a loss and I'm emotional. All this is definitely psychological, but not really. Once you get the strategy down, once you understand the strategy like the palm of your hand, only then can you start thinking about psychological limitations. But if you do not understand trading in general, your trading strategy, you have never backtested in your life, or you don't even have the data on your strategy, or if you do, it's not your own data, you have not tested it, then listen, your psychology is bad because the technicals are bad. And only after you get this first one down can you focus on the other one. Which takes me to my next point, which is the opposite of this. It's not the strategy, it's you. Once you have your strategy down and you have a possibly profitable strategy, and how do you know if a strategy is profitable? Well, you either backtest it a lot, and by the way, don't do just one run of backtesting and then you're like, oh no, this is not profitable, I'm going to leave it. No, you probably don't have the strategy down yet, so don't let that discourage you. But once you have a proven edge and you know that the strategy is possibly profitable and you've seen other people doing it, but you are the one not cracking the code, this is when you can start thinking that it's not the strategy, it's you. And listen, this is coming from someone that has strategy hopped a lot. A lot of people have commented, why are you changing strategies? Why are you changing strategies again and again and again? A friend of mine said, dude, I think you've gone through basically all the popular communities out there. And even though I'm not extremely proud to say that, yes, I've been strategy hopping for some time, which I will still talk about in this video, I never blamed the strategy for not being profitable. I blamed myself for wanting to look for something else. And this is where the shiny object syndrome comes to play, where you think that there's a perfect strategy, you think that somewhere you are going to get 100% strike rate, 100% returns, and you're never going to be happy with the strategy that you're on, not understanding that the whole time the problem was you and not the strategy. And for that, you need to take personal accountability, which takes me to my next point, which is that you have to find something that you want to pursue, that you have data on, that you've seen other people succeed, and then you simply have to go all in. If you continue strategy hopping month to month, quarter to quarter, then you are never going to stick to something and you are never going to achieve profitability. Why? Because you're almost always starting from scratch again. So let's think about this. In the beginning, when you join a community, you don't know anything about the strategy, or you don't know a lot about the strategy. So you have a learning curve where you don't know anything, but you start learning a little bit, then you start becoming a little bit profitable and better and better. You start to get your data, you start to see that it's kind of profitable, but then you take a few losing trades that were probably not in the plan because you don't understand it all that well, and then you think, damn, but this person on Twitter is making money every single day, maybe I should go to what he's doing. And then you start the learning curve again, and then you start the learning curve again and again and again, and all of a sudden you're 20 years in, you have 3 kids, and you're not profitable. So this comes to the old saying that there is no holy grail. And even though some people don't agree with me that you have to find the strategy that suits you, and they think that you have to suit a strategy, I still believe that everyone has their own traits trades. And for that, once you find a strategy that you really like and you see yourself trading it in the future, this is when you can go all into that strategy. And hey, I've said it in this channel, if you guys see me switching strategy again from ICT, you better call me out, because I've said to myself, it's either ICT or giving up on trading. So you found something and now it's time to go all in. So this is what I did for a long time in order to become profitable. First, understanding that it was not my psychology, but it was a strategy. I did not know how the strategy worked. Then after I knew how the strategy worked, I decided to work on my psychology. After the psychology, I decided that I wanted to go all in onto one thing. So basically burn the boats, which is, in my framework, either this or you give up. And only then, after finishing this cycle of strategy, psychology, and focus, did I start to find my consistency. Which takes me to my last point, and in my opinion the most important, which is that social media deceives you. And why is this the most important one? Because not only can it mess up with all the other frameworks that I just told you, because on social media you think that only psychology is the problem, or you think that there's a holy grail, or you always see a new shiny object, so you try to chase it. So you never go all in, you never understand the strategy, and you never understand yourself. But in my opinion, the biggest problem with social media is that you are comparing your chapter 1 to someone else's chapter 10. So all of a sudden, you want to go from 1 to 10 without going through 2, 3, 4, 5, 6, 7, and so on. And I felt it lately, where I've decided to reduce the risk on my funded accounts to 0.3%, because my mindset has shifted from let's get a big payout to let's get a big amount of capital under management. And so I've decided, before I am funded with 800k or $1 million, I will only be risking 0.3% on every trade on my funded accounts. And then I face the problem with social media of seeing people making $1,000, $2,000, $5,000 per trade, and then all of a sudden I'm thinking, I could have done more. But this goes back into the idea of comparing your chapter 1 to someone else's chapter 10. I've decided from now on that I'm not looking for a 10, 20k payout. I'll take it if it appears, but instead of focusing on what I'm going to achieve in the next 6 months, I've decided that I'm going to focus on what I'm going to achieve in the next years. And so 0.3% might not look like a lot when you're managing 100k, 200k, but it is much more once you scale it up to $1 million, for example. And this is the framework that I talked about in the video of never blow a funded account. And it was after that video that I started reevaluating the way that I was approaching my funded accounts. So instead of letting social media deceive me, I've decided to switch my whole values into consistent payouts, following my framework and trying my best, because I know it's hard, to not compare myself to others. So let me know, what are your frameworks when it comes to trading? Do you have similar frameworks to the ones that I personally have in my own journey? Let me know in the comments, and I would love to have your input. I'm sorry that this video was all over the place, but getting a little bit sick, I wanted to record the day in the life, which I will do next week, but that won't happen today because, well, again, I'm sick / getting sick. And I'm not sick like I'm fucking sick, like I'm sick like I'm fucking sick, but I'm also sick a little bit with my health. But yeah, hope you guys enjoyed. Make sure to check the links in the description for prop firms and discount codes. Let me know in the comment section what you think. Next week we have a day in the life, and I'll see you. Bye.